Welcome back to Inside Out. Well, Uniparts is a stock on our radar, and as you can see, post its listing in December 2022, the stock price has done absolutely nothing. Well, let's educate you first on the business aspects. The company is a leading supplier of systems and components for off-highway vehicles. It's one of the only major players who combines their cost-competitive India manufacturing and global delivery capabilities. Well, the company has been a partner of choice for global leaders in the agriculture and construction, forestry and mining segments. Their key clients as well should come up for you on the screen, with John Deere being one of its key clients, contributing nearly around a third of its total revenues. They supply critical load-bearing products that are subject to strict tolerance, specifications and process controls, which require long approval times, and hence they enjoy super profitability and return ratios. But I'll get to that in just a bit. Let's explain to you their key products, which include 3-point linkages, which is also known as 3PL, precision machine parts, which is also known as PMP, along with their recent foray into adjacent product verticals like hydraulic cylinders and power takeoffs. Well, let's explain the function of each of these segments. 3PL helps in quick and easy attachment and detachment of implements from tractors. PMP is made to tight tolerances and durability to withstand the tough operating environment of offshore highway vehicles. These are high quality and reliable components for use in construction machinery, equipment and structures. Well, let's get to their market share then globally. They command 16.7% in the global 3PL market and 5.9% in the global PMP market. Well, over the last 3 years, the company has grown at a CAGR of close to around 15%, with margins moving to around the 22% odd mark. However, the start to this fiscal has been slow, with a weak showing in the first quarter. There was revenue degrowth, though they managed to hold their margins at around 20%. That's a little bit encouraging. Well, the key reasons for the disappointing quarter one showing is that the small agriculture market demand continues to be subdued in North America. Aftermarket segment has remained soft for a little longer than they anticipated earlier in the Europe as well as the US market. And demand in the Indian tractor market had a slow start to the year. Well, the global tailwinds include India emerging as the preferred manufacturing hub, supply chain disruptions led by the pandemic, and global uncertainties have led to manufacturers looking beyond China. And also the US $1 trillion infra bill that's expected to boost demand for construction equipments as they aim to modernize their aging infrastructure assets. Well, in terms of the company-specific triggers, Uniparts has developed a 3PL system for utility terrain vehicles, which opens up a whole new market for them. Additionally, they're the preferred supplier for manufacturers of sub-70 HP tractors globally, but now they intend to focus on increasing their market share on the customer spend per vehicle by manufacturing 3PL products for tractors with more than 70 HP. The company is also focusing on expanding its share of warehousing sales, which will drive profitability, as they intend on taking this segment to around 47 to around 46% of its mix in the coming years. Finally, they're also focusing on growing the adjacent segments, which as of now are relatively small, but whose market is 10 times bigger than its existing market size of 3PL and PMPS. What works for the company is it trades at around 13 times, which is not very expensive, though we need to see growth pick up. But they have support because of the clean balance sheet, which puts them in a good place to grow inorganically, and further supported by solid ROCE and dividend payout ratios. Well, let's wind this down with the shareholding pattern. The promoter entity, it has close to 65% stake in the company, and also they have participation coming in from institutions as well. Well, we've completely run out of time on this edition of Inside Out. It's goodbye from Sonal and myself, but you do write to us and tell us about companies you want us to discuss. We'll try to feature some of them on this show. Thanks so much for watching.